HIMS just lost 40% of its value in a single weekend. The FDA just killed the GLP-1 compounding gravy train, and everyone is asking, is the stock dead? Well, I'm about to show you guys my exact recovery plan in this video with real money and zero emotion. Now, before we jump into it, I want to show you guys about my lifetime membership at just $199. That is not per month, but that is lifetime. Every signal I send, every position is updated in real time. After those first 100 spots, prices are going up permanently. Link can be found down below. Now, I know your time is valuable and you guys are not here for excuses. You're here to see how professionals handle losses. Let's break down what happened and what I am doing about it. So what actually happened to HIMS? Well, the FDA entered a shortage designation for their GLP-1 compound. No more $200 a month semaglutide subscriptions. No more 77% year-over-year growth fueled by the weight loss drugs. 30 to 40% of the revenue potential is going to be impacted. This is huge, guys. This is basically a black swan event, just like we saw last year with HIMS. And this is exactly why HIMS was always placed as a tier 2 high growth, high risk stock. And that this weekend just materialized exactly why it was a tier 2 and not a tier 1. Stocks are going to do this. I think the stock's going to gap down maybe 15 to 20% come overnight hours tonight or even tomorrow morning when the market opens. Now let's talk about what could save this company. There's 3 scenarios that I have outlined for you guys. First scenario is a big partnership with Big Pharma. So there's a 40% probability of something like this happening, in my opinion. We could see HIMS or hers partner with Eli Lilly or Novo to become an authorized distributor of the branded Zepbound or Wegovy. And their competitor Ro is already doing this. Lower margins than compounding, but it's legitimate, scalable, and has zero FDA risk. This would be the smartest play for them at this moment. And if we do see that, then we could see the stock rebound above $25, and that would be amazing. Second scenario, core business holds. Well, why would the core business hold, you might ask? Well, because everyone forgets that HIMS isn't just a weight loss drug company. And they do $600 million in revenue a year just from sexual health, ED treatments, hair loss, testosterone, and another $200 million in dermatology. So guys, even though this is one of the biggest parts of their company, it's not their whole company. Third scenario, which is probably the least likely to happen, is they get bought out by a bigger company like Amazon or CVS or Walgreens, because as the price drops to $12 to $15, HIMS becomes very attractive at a 2 or 3 times the price to sales ratio, and private equity loves profitability. Here's what I am doing with my capital, guys. HIMS is, like I said, not that big of a position in my account, and I personally am going to wait for price to get down to this 15 to 16 zone, which I'm going to deploy another 33%, not of my entire account. I want you guys to understand that. So let's say right now, HIMS is $7,000 of this one portfolio here, okay? And we want 10% total allocation. So that means we have another $3,000 that we can deploy into the stock and trying to lower our average. That way we can get out a lot quicker. So when I say 33%, I mean 33% of that $3,000. So once price gets to that zone, we're going to deploy 33% of that. And then if we drop down a year, which is that 12 to 14 zone, we will look to deploy another 33%. Finally, this zone here, the $9 to $12 zone, we're going to look to deploy our final 33% of that 3K. From there, we are going to immediately start running aggressive covered calls from 16 all the way up to 25, depending on what the premium is. And we're going to try to get out of the stock as soon as possible. So yeah, that's basically the plan. Dollar cost average in those 3 stages. The exit plan is very simple, guys, and non-negotiable. I am selling everything on the first meaningful bounce this stock gets back to $16 to $25. Our average cost should have been lowered very much by this point, where if it does bounce to 16 or 17 or 18 or even 22, if we're lucky, we should be able to get out close to break even or get out with a small loss. And that is capital efficiency and recovering most of the loss as quickly as possible, in my opinion, without taking a huge hit this early in the year. There's no tax harvesting we need to do right now. No point. If we need to cut this position at the end of the year and use it as a tax harvest tool, that's a video we can make at that point, but I don't think we'll get there. I want you guys to understand something. When you run a diversified strategy across 20 plus positions, some outcome will miss. That is not failure, guys. That's the cost of playing the game that we like to play, where the winners must outweigh the losers. HIMS made sense given the information at the time. We identified the regulatory risks at the time, and that's exactly why we listed it as a tier 2 stock and not a tier 1. We also followed the appropriate 15% max allocation rule. Information changes, guys. And as information changes, our framework must change as well. And that is not backtracking from the initial analysis. That is being disciplined with your capital allocation, because the past explains your trade. The future rewards your discipline or how you react to that trade. So what is going to happen Monday, guys? Expect a gap down to probably $16 to $17. And if you guys have cash secured puts open, I would highly suggest closing them. That way you don't get assigned at a higher price. I have a $25 cash secured put right here. which I will most likely be rolling down to 17, 18 tomorrow morning, depending on how far out and what kind of premium I can get. I will be watching for 3 signals before I enter. I want to see capitalization volume at 3 times to 5 times normal. I want to see RSI below 25 on a daily chart and any insider buying that we might be able to locate. When all 3 line up in this zone here, that's going to be a strong signal to buy, guys, and I will execute my first entry. Well, you guys have made it this far, so here's what I'm watching this week for better opportunities, and I'm going to gift you guys with a little present since you guys made it to the end of the video. So I want to talk about PLTR. Basically, every software company, we saw it just completely take a dump last week because of this whole AI scare. And if we look at PLTR, this thing is down 40%, guys. I mean, that is unreal. This is a steal right here. This is a strong support level, 130 that it's bouncing off of. So the plan for Monday and a free trade idea for all of you guys that you can partake in if you like money. Only take it if you like money, though. I don't know why I can't switch. There we go. Let's make this smaller. Cool. So if you guys like money, this is what I'm looking for on Monday. We are going to see price consolidate. Hopefully we get a bounce up to 139, 140 like this. And then we might see price come back down, maybe try to retest this 133, 135. If we can see that happen, then I will enter a lead position right in this area here. And I will look to ride this bad boy back up to 175 or even top of the Bollinger Band at 190. If it gets enough momentum, I will hold the position. Now, if you guys want my exact entries and exits on my leap trades, then all you guys have to do is hit the link down below. 100 lifetime spots, only $199 at this moment. Use the link in the description. And don't let this opportunity go to waste, guys, because at $200, that's cheaper than the price of coffee every single day for 30 days, and you get lifetime access. Here's our last leap trade that we closed, which was on Robinhood. We did this Friday, and this was actually a one-day hold. Beautiful results. So if you guys want trades just like this, we actually opened up a SoFi one as well, which is already up 20%. If you guys want trades just like this, hit the link down below, and I'll see you guys in the next one.